Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. So far we have completed 15 problems on working capital and cash management. Last video I have explained one problem on cash management. So in this video also 3-4 problems I'm going to solve on cash management. If you have not watched the earlier videos, I suggest you to go to the playlist of my channel. Select the subject financial decision making. Select the videos of working capital. Be acquainted, be perfect on the concepts of working capital management. Now, before starting the 16th problem, I expect my viewers to have a printout of the problems, which I have given in the link under my description. Take the screenshot of the solutions of few problems, then I'll explain. Now, see the 16th one. I am reading out the 16th problem. From the following information, prepare a cash budget for 3 months ending 30th September 2017. So, ending on 30th September 2017, 3 months budget. That means July, August, September. Then here the data is given: sales, purchases, wages and overheads. Additional information: opening cash balance on 1st July 60,000. This is the opening cash balance at the beginning of the budget period, 1st July. Debtors, credit sales pay in the month of following the month of sales. Here the credit sales are collected. That means the amount are collected from debtors in the next month. For example, if credit sales are made in January, then in February the amount will be collected. The credit sales of February, the amount will be collected in March. Like that, 1 month credit period is allowed to debtors. Similarly, creditors, purchases, are paid in the month following the month of purchases. As we are allowing 1 month credit period to debtors, the creditors are also allowing us a 1 month period. That means whatever purchases we will make in January, the payment will be made in February. The purchases of February will be paid in March. Like that, 1 month there is a delay in payment to creditors. Then expenses are paid in the same month. Here expenses means overheads. So overheads same month. And assume that wages are paid on monthly basis on the 1st of every next month. That means again there is a delay in payment of wages for 1 month. For example, the wages of January will be paid on 1st of February. The wages of February will be paid on 1st of March. That is the situation. That's all. This is the only information. Now see from beginning. Cash budget for 3 months ending 30th September 2017. So July, August, September. 3 months, 3 columns I have prepared. Now first of all, receipts, payments and closing balance. These 3 parts are there. The first part is receipt. Collection from debtors. We don't have any cash sales. Last video, one problem we have done on cash budget, in which there was cash sales and credit sales. But here there is no mention given for cash sales. That means all the sales are on credit. So we only have collection from debtors. So whatever sales are made in June, that will be collected in July. 1 month credit period we are allowing to debtors. So how much are the sales in June? 2 lakh. This 2 lakh will be collected in July. So July you have written 2 lakh. Similarly, the July sales are 1,50,000. So 1,50,000 will be collected in August. August 1,50,000. Similarly, August 2,50,000 sales of August will be recovered in September. So September 2,50,000. That's all. Take the total A, 2 lakh, 1,50,000, 1,250. A is the total of receipts. Now payments. Payments to creditors. It is given in the problem that 1 month credit period is allowed by creditors. That means whatever purchases we are making in June, the payment will be made in July. So payment to creditors. How much are the purchases in June? 1,30,000. 1,30,000 is the purchases of June. It will be paid in July. So July 1,30,000. Similarly, how much is the July purchases? 1,40,000. 1,40,000 are the purchase of July. It will be paid in August. So August 1,40,000. Now August purchases are 1,60,000. The purchases of August are 1,60,000. This will be paid in September. So September 1,60,000. Now wages. For payment of wages, 1 month delay. Because whatever wages are there, that will be paid on the first of the next month. So how much are the wages for June? 20,000. 20,000 are the wages of June. It will be paid in July. So July 20,000. Then July's wages are 30,000. 30,000 are the wages of July. It will be paid in August. 30,000. Then August wages are 20,000. This 20,000 will be paid in September. September 20,000. Overheads. Regarding overheads, the same month. So how much are the July wages or overheads? 10,000, 15,000, 15,000. So 10,000, 15,000, 15,000. That's it. We have taken all the items. Now take the total of the payments. B is the total of payments. 1,60,000, 185, 195. Now we have receipts A and payments B. First of all, we'll calculate surplus or deficit. If positive, A minus B. A minus B. If you get positive value, surplus. If you get negative value, deficit. Now 2 lakh minus 1,60,000. It is positive 40,000. Similarly, 1,50,000 minus 1,85,000. 35,000 negative deficit. So bracket 35,000. Similarly, 250 minus 195. 55,000 positive surplus. So we have surplus, deficit, surplus. Now opening balance of cash at the beginning of 1st July is 60,000 given in the problem. So opening balance cash 60,000. Now you add up 40 plus 60, 1 lakh is the closing cash balance of July. Now this closing balance of July will become opening balance for August. So 1 lakh rupees here. So 1 lakh minus 35,000. 65,000 is the closing balance of August. This 65,000 will become opening balance for September. Now 55 plus 65, 1,20,000 is the closing balance of cash of September. That's it. So this is the complete solution of 16th problem. Now I am coming to the 17th one. ABC Limited has estimated that use of 24 lakh rupees of cash during the next budgeted period. So in 1 year, the total cash payment required is 24 lakh. That is the estimated payment of cash in the next year. It intends to hold the cash in a commercial bank which may pay interest at 10% per annum. So 10% per annum will be the interest paid by the banker on the deposit. For each withdrawal, the company incurs expenditure of 150 rupees. Every time when withdrawal is made, fixed cost of 150 rupees will be incurred. What is the optimum size for each withdrawal? So whenever the information regarding annual requirement and fixed amount of transaction cost and the return is given, we apply Bommel's model. This Bommel's model is very much similar to EOQ, Economic Ordering Quantity of Inventory Management. Now, according to Bommel's model, the optimum size of each withdrawal is ascertained as follows. The formula is there for calculating optimum size of each withdrawal. That is C is equal to 2 into AT by I under root. What is C? Optimum size of withdrawal. That's what we have to calculate. Unknown value is C. A is the estimated cash requirement per annum. In 1 year, how much is the total requirement of cash? 24 lakh given. T is equal to cost of transaction. The per transaction cost is 150 rupees given, fixed. I is equal to interest rate on deposit. The banker is allowing interest rate of 10% per annum. So 10% means 10 by 100, 0.10. Now substitute the values in the formula. C is equal to 2 into, here 2 into A into T. So 2 into A, how much is A? 24 lakh into T. T is 150. So 2 into 24 lakh into 150 divided by I. How much is the I here? 0.10. So if you multiply the three values, divide by 0.1 under root. So after root you are getting 84,852.81. So round it off to 85,000. So the optimum size of cash withdrawal is 85,000. So whenever we require the cash, we withdraw the cash 85,000 every time. So number of transactions per annum. How many transactions we have to conduct? The total cash requirement is 24 lakh. Divided by what is the optimum size of withdrawal? 85,000. So 24 lakh divided by 85,000, 28.23, approximately equal to 28 transactions. So in 1 year, 28 times we have to make the withdrawal. Every time we have to make the withdrawal of 85,000. So what is the total fixed transaction cost? Each time transaction cost is 150. How many times we are withdrawing? 28 times. So 28 into 150, it comes to 4,200. This is the total transaction cost per annum. That's it. This is the end of problem number 17. Now, 18th problem. Alekia Limited has an estimated cash payment of 8 lakh for a month period. Month means every month 8 lakh. We want per annum. So 8 lakh into 12, 96 lakh will be the cash requirement for 1 year. And the payment are expected to steady over the period. The fixed cost per transaction 250 rupees and the interest rate on marketable security 12% per annum. Calculate the optimum transaction size. Here also, annual requirement of cash 96 lakh, 8 lakh into 12. And the transaction cost per transaction 250. And the interest rate on marketable securities 12%. So again we can apply Bommel's model to find out the optimum transaction size. What is the optimum transaction size? We can find out by applying Bommel's model. Just now what we have applied. So according to Bommel's model, the optimum transaction size is C is equal to 280 by A. C stands for optimum transaction size. That's what we have to find out. And A is equal to estimated cash payment for 1 year. So here 8 lakh into 12, 96 lakh is the total cash payment required for 1 year. Next, T is equal to fixed cost per transaction, 250 rupees given. And I is the interest rate on marketable security, 12%. Means 12 by 100, 0.12. Now substitute 2 into 96 lakh into 250 divided by 0.12 under root. So after root you are getting 2 lakh. The optimum transaction size is 2 lakh. Now there are number of transactions per annum. Annually how much cash total requirement? 96 lakh. And every time we are withdrawing how much? 2 lakh. Transaction size is 2 lakh. So 96 lakh divided by 2 lakh you will get 48. In 1 year 48 transactions have to be conducted. Each transaction cash withdrawal 2 lakh. So how much is the total fixed cost? Each transaction fixed cost is 250 rupees. So 48 transactions we are conducting. So 48 into 250, 12,000 rupees is the total fixed cost we are incurring. That is the transaction cost. That's all. So this is the 18th problem. Now see the 19th one. Calculate return point and upper control limit from the following data. Again, a new type of problem. So return point and upper control limit we have to find out. Interest rate per annum 10.95%. Transaction cost per sale 20 rupees. Variance of cash flows per annum 90 lakh. And cash balance lower limit 20,000. So two items we have to calculate. Return point and upper limit. So return point and upper limit we have to find out. First of all we calculate return point. Return point, the formula is 3th root of 3t into sigma square by 4i under root. That means 3th root of 3t sigma square divided by 4i plus LL, lower limit. Now what does this formula means? RP stands for return point. That's what we have to find out. And T is equal to fixed cost per transaction. It is given in the problem 20 rupees. Variance, sigma square means variance. The variance amount is given 90 lakh and I stands for daily interest rate. Here in the problem, we are not given daily interest rate, we are given per annum interest rate. The per annum interest rate is 10.795. That is the interest rate per annum. Per annum. So per month how much? Per month it comes to 0.9125. This is the per month. So 0.95 per month into this much means 0.009125. This is the rate per month. Now we require per day, because daily we require, no? Daily interest rate we require. So here we calculate 0.009125 divided by 30. Divided by 30. So 0.009125 divided by 30. We are getting 0.000304. 0.000304. Is it right? Yes, 0.000304. Now, here we substitute LL is equal to lower limit, that is 20,000 given in the problem. Now we substitute 3th root of 3 into 20 into 90 lakh divided by 4 into 0.000304 plus 20,000. So how much we'll get? Numerator will get 54 crore. Denominator will change here. That is 4 into 0.000304 is equal to 0.001216. Now this will change. Now I am dividing 54 crore. 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. 54 crore divided by 0.001216. It comes to 444,078,947,368. 3th root of this one. So it comes to 444,078,947,368 to the power of 1 by 3. So if you take the scientific calculator, on scientific calculator we can find out the value. How much we are going to get now? Scientific calculator, we want 3/4. That means 3th root of. So 3th root of how much? 0.078,947,368. It comes to 7,629.33. 7,629 plus 20,000. So it comes to 27,629. The return point is 27,629. This is the return point. Now upper limit is UL is equal to 3 into RP minus 2LL. So here we get RP as 27,629. So 27,629 into 2. 27,629 into 2. Into 3, sorry. 27,629 into 3 is equal to 82,887. 82,887 minus 40,000. That means 22,887. 40, 50, 60. Not 22. 82,887 minus 40,000. 42,887. This is the upper control limit. 42,887. That's it. It is minus, huh? Yeah. So 27,629 into 3. That is 82,887. Right. So this is the upper limit. So we are required to calculate the return point and upper limit. Return point is 27,229 and the upper limit is 42,887. This is the end of problem number 19. Inshallah, we'll continue the next problem in the next video.